Alright, good morning folks. I am Becky with Enduring Finances. Welcome back to my channel. It has been about 6 months since my last update, and today we're getting back into it. So as we know, we ended last year with selling the majority of my stock portfolio. To be specific, we sold off about $42,000 worth of stock in order for me and my wife to purchase a new house together. We wanted to make a down payment. We were in the process of selling our 2 individual homes and buying one, and we needed to make it happen, and we needed some cash. So we liquidated $42,000, purchased a new home together, and then had to wait a little bit to sell our individual homes. So that happened. Things finally settled down. We got into our new house and finally built that money back up again. And so in February, end of February, I reinvested about $35,000 into my stock portfolio, and then in March I started buying new shares of stock. And so I bought quite a few different shares. Most of them were in the real estate sector, consumer staples, and finance areas. And then the one big thing that I changed was I started investing in a ETF that is specifically for dividend payouts. So I invested 550 shares on March 4th in ticker symbol QQQI, and it has done very, very well. I put in about just shy of $29,000 originally into it. So let's go ahead and take a look-see at how my portfolio is doing now. The end of May, we just started June, and how it's progressed there. In total, I have a lot of shares in QQI. So let's jump into it and figure this out together. Alright, so we ended 2025 with my portfolio valued at $4,340.81. Not a large amount in there. We saw a small amount of dividends in January, and then February, not dividends, gains, I should say, market value increases. So about 1.74% and then 2.99%, so not too bad for a small portfolio. We ended the month of February with it valued at $4,548.55. So, almost just over $200 increase there from the beginning of 2026 to February. And then, like I said, in March, we started reinvesting. And so we invested $35,000 back into my portfolio. The stocks went up and down a little bit, but I didn't put a gain or loss here because that's so hard to track purchasing such a large amount. So by the end of March, after investing that money back into the stock market, my portfolio was valued at $37,633.12. And then we moved right into April. We saw a jump of 9% increase in market value. I didn't invest any more money other than that $35,000 in March. So we saw an increase of $3,387, and it ended April being valued at $41,020.25. And then we fast forward to May. We saw again a big increase, 6.44%. Gain of $2,641.22 in market value increase alone. We ended May with my stock portfolio valued as $43,661.43, and that is a huge amount of money to increase from March, because we added $35,000 back in. We're valued at $37,000, and we're up almost $6,000 since then in 2 months. So the stock portfolio is performing very, very well. In total for the year, we are up over 20% increase, and I did take out that March time frame so that we are not blowing that out of proportion by adding $35,000 to it. So we've increased $6,236.09 in market value, not including that $35,000 increase. So big jump. Excited to see what the rest of the year holds. let's kind of take a look, see at my new strategy, because like I said, we kind of adjusted things a little bit, we changed it up, so let's look at that. So we ended 2025 with big focus in finance and real estate. They were my biggest dividend makers. Real estate has been one of the top ones that I have seen as far as just dividend income coming out of it. So we ended it with just about $2,000 in real estate, $543 in finance, just shy of $500 in healthcare and utilities, and then it just kind of goes down from there. And we were seeing an average total dividend income of $321.32. So that's how we ended the year. We'd sold off $43,000 worth of my stock. What we went ahead and did is reinvested in those ETFs, that QQQI fund. And so that right now at the end of May is valued at $32,386.52. So I've essentially put $32,000 worth into this sector alone, into this one big ETF. So it's a conglomerate of a large amount of companies that pay off good dividends, and I buy portions of them with one share and I get that money back. So it's pretty good. It's on track almost with QQQ, which is set up the exact same way, except for market value increase is its focus versus dividends. So QQQI is dividends, QQQ is market value increase. So we're doing the dividend ones. This is dividend stock portfolio, so that's where we're at. We are still heavily in real estate because QQQI does not invest in real estate, and I say REITs, so real estate investment trust, which is what has been a large majority of my real estate stock investment. Can I have my shirt back? Can I have my shirt back? Thank you. You want to come up here? Say hi to Daisy. She's our new puppy doggy. And we got her and she's chewing on my sleeve. She's just about 6 months. So, real estate sector, real estate investment trust, $3,808.66. This comes in about 8.8% of my current portfolio breakdown. We want it to be about 10%. Consumer staples is a big one. That's what you get when everything goes to crap. That's what you still need. Your Lickies and Chewies, your breads, your butters, and all of that. So consumer staples, we want it to be about 8%. It's about 6.4% of my portfolio, coming in at $2,759. And then we have finance as well, and utilities at 2%. Both are too high. Finance is a fantastic dividend return, so that's why we're still a little bit focusing on there, because some other stocks that I like. And utilities is, again, with that consumer staples, you need electricity, you need gas, you need those things, and there's been some good stocks in there that I like. And then we have, what we like is 1% in healthcare and energy, and then 0.5% in materials, and then it just kind of goes down there from there. And we can see that the total dividend yield based on the current breakdown is about $4,955.10 a year in dividends. So a huge adjustment from where my portfolio has been historically. We have been way under this essentially payout. And all of this is coming from investing in QQQI. And this came from my I was looking at doing this, and then I talked to my retirement investor at work, who is very knowledgeable, and we had a whole conversation about how and what was going on, and he was like, this stock, and I was like, yes. So we're going to focus heavily in QQQI. For the month of May, we purchased 2 new stocks that are showing up in here. We bought 2 new shares of QQQI, rebalancing that, keeping that up. We want that 75% of the portfolio. So we bought them at $55.36 a share for $110.72. And then we bought 1 share of ticker symbol NNN for $44.67. So we spent a total of $155.39 on new stocks. And it is almost matching directly what I'm getting from QQQI. So excited about that. Speaking of dividends, let's take a look, see at how that is going. So again, we talked about the beginning of the year, we had a small portfolio that shows their dividends, making about $60 in dividends before we reinvested a bunch of money. Coming into March, we earned quite a bit of dividends, huge jump there. So $369.41 in dividends, $483.74 in April, and then in May we earned $392.68. Total for this year in dividend earned is $1,306.47, surpassing what we made, I think, last year in dividends. So already we're knocking it out of the park 5 months in. You can see the big increase here from when we had almost zero money in our portfolio to reinvesting that $3,500. And then again, the best way to look at this is quarterly dividends, because most companies pay out every quarter. QQQI pays out every single month, and it is a hefty one. So, you know, we started back in 2021 tracking these quarterly dividends, and we've seen those slowly increase over time. And then we saw a huge jump in this last year. So we ended 2025. One of the highest quarters we had was $337.55. We surpassed that in quarter 1 2026, $430.05, and way over that for quarter 2 at $876.42. We're not even done with quarter 2 yet. So phenomenal increase there. Let's go ahead and take a look, see at the individual dividends that I earned in the month of May, so that you can get a look-see at them. Alright, so in total I earned 8 different individual dividends. First one came in on May 5th, ticker symbol BNDX. We earned 11 cents from this share, and we have 1 share of this right now. Average price is $48.33 a share. Average price is $49.38 a share. Current price is $48.33, and the market value is $48.33, and it comes up to 0.11% of my entire portfolio. So nothing too crazy there. Coming in with dividend number 2 on the 15th of May is Costco, one of my favorite companies. We earned $1.47. We have 1 share of this stock, bought it for $9.98. And it is valued at $956.32, so we lost about 4% there. Dividend number 3 coming in again on the 15th of May is ticker symbol NNN, one that we've been reinvesting in that real estate REIT sector. We're in $1.20 from the 3 shares that I own, and we're up about 9.12% in this position right now. And then dividend number 4 coming in again on the 15th of May is ticker symbol OHI, Omega Healthcare Investors. We earned $2.68 from the 4 shares of this, and we are up over 25.3% in this. And then the big dividend earner now, which is the QQQI, the NASDAQ 100 High Income ETF Fund, so 100 of the highest dividend earning companies in one. We got this on May 22nd, earning $372.94 from the now 566 shares that I own of this. We are up over $2,831 in this position for a gain of just over 9.5%, and this makes up just about 75% of my portfolio. And then dividend number 6 coming in on the 22nd of May, the ticker symbol RY, the Royal Bank of Canada. We are seeing a Canadian 15% tax came out of that, so we are taking home $1.01 from the 1 share that I own, and we are up over 39% in this position. And then dividend number 7 coming on the 27th of May, ticker symbol SIRI, which is Sirius XM Holdings. We're in 27 cents for the 1 share, and we're down over 32% loss in this position. And then the final dividend, our monthly dividend earner that I like, ticker symbol EFC, Ellington Financial Company. We earned $13 from the 100 shares that I own, and we were up almost 11% in this position, so we are doing all right there. But this wraps up the 8 individual dividends that I earned in the month of May. Let's go ahead and take a look, see how I'm doing as far as goals, what new goals I have for myself and how we're accomplishing them, and the statistics, my favorite part of my portfolio breakdown. As far as the statistics go, so we ended December, we had a dividend yield of 7.4%. Going into June, so ending May, we're coming in at 11.46% in dividend yield. And originally my goal was to hit about 4%. We saw a drastic change when I sold off a lot of my stocks, and that went up. Right now, the average dividend yield per year is $4,955.10. Per month, that's $412.93. Per week, $95.29. Per day, that is $13.58. And then per hour, that is 56 and 6 cents, cents. I still can't talk. Change. And then per minute, that is 9/10 of a penny. So almost 1 penny for every minute of just having this stock portfolio. And then if we were to compare this to the average 40-hour work week, we would be making $2.38 per hour. And so big jump from end of the year to now with reinvesting in QQQI. I haven't tracked this data since I reinvested into the stock portfolio, so we're seeing this just jump up a lot, but that's okay. Let's go ahead and take a look at my goals. So because we had such a big adjustment as far as transitioning the dividend yield, focusing highly on QQQI, and letting the ETF kind of take the bulk of what's going on, we had to adjust our goals because it really boosted us forward in what we wanted. And as far as our long-term goals, I really wanted to hit this $2,000 in dividend yield on average per month, which is about $65.75 a day on average. That was my big goals. Well, before, it was about $600,000 at 4% in dividend return annually to hit that. With the new breakdown and 75% of my stock portfolio going in QQQI, we're going to get there a lot faster. We need about $240,000 with an average annual return of about 10%, and we're over 11% right now, so it's doable. For 2026, my goal is to hit $4,400 in dividends and reach portfolio value of $44,000. We're almost there already, or $43,661, but I'm keeping this because you never know, the market can go up or down, and I'd like to attain this goal. Just based on where I'm at as far as 10% of portfolio value at $44,000, we would need to make $336 monthly average in dividend yield, which we've already done, which is $12.05 a day in dividend yields on average, which we have already done. If we jump up here to our current status, portfolio value $43,661. Total dividends this year is $1,306. Per month on average, that's $412. So we've already surpassed the goal. $13.58 dividends per day, already surpassed the goal. But we are balancing now that QQQI and building up the rest of them. So we're going to really be seeing that kind of slow down as we adjust minutely now and trying to maintain that 75% QQQI and everything else. So this I don't think is going to fluctuate as much as we go out through the rest of this year. The total dividend for yield is going to keep going up, and we'll see a little bit with portfolio value. But again, my focus is not on portfolio gain as far as market value increases. It is focused on dividend production. How much dividend am I getting out of the companies? So we just have over here my long-term goal checklist so that I can visualize it and you can visualize it with me. Portfolio value, we started tracking this at $30,000. Notice I adjusted this. Everything had to change because the goal changed as far as the portfolio value itself. We're over $40,000, not quite over $44,000. So we see green here, and we'll slowly work our way down, and we're a lot farther ahead as far as the dividend monthly average and the different daily average. So we've already surpassed $14.21. We're almost more than halfway there to that $65. And I know that looks like a large gap, but we're getting there really fast, it feels like now. $2,000, we're over past $410. So we are well on our way to getting to where we want to be. I feel like all of these goals are very attainable now. I love the fact that I'm now invested in this ETF fund. And part of the big reason with that is what happens when you pull out a bunch of stocks? Just like we did to buy the house and sell the house. What happens? Well, we have to essentially figure out which ones are we going to sell and how do we balance the portfolio and how does that manage itself. And, I'm 33 going on 34 next month. And I've got a long time before I get out of the stock portfolio business here. And QQQI is set up so that I can essentially sell off all the other stocks that I have and just maintain QQQI and still have different stocks invested in and have that diversity and not be as risky as buying individual stocks. So it's a safer game long term. And it allows for that to fluctuate with the market and the company's changing. And the reason I didn't go fully into ETFs and mutual funds is because I still like to dabble in the stock market. I still like to play around and look at the companies and follow them and track them and say, I really like this company and I want to invest in this company. And the great thing is, it's set up so that I can do that. And I'm still earning dividends the way that I want to, and I'm just taking a little bit of that weight off myself and just focusing on the best companies that are making the best amount of dividends there, and a little bit for me to play around with. So that's our big change there. That's the month of May and where we're headed into the future, and I'm really excited about it. I would love to hear how your portfolios have handled this 6-month hiatus and where you're at and how you're investing your money now. But until next month, folks, I will let you go, and I will talk to you then. Bye-bye.